This is Siddharth Alwalia. Welcome to the 100x Entrepreneur Podcast. This episode is brought to you by Prime Venture Partners, an early stage VC fund led by Amit Somani, Shripati Acharya, and Sanjay Swami. Prime is often the first institutional investor in category creating tech startups in fintech, SaaS, healthcare, and education, such as MyGate, Quizzes, MFine. To know more about Prime, visit primevp.in.
Today, I have with me Sushma Kaushik. Sushma is a partner at Aavishkaar and brings with her over 18 years of diverse experience in the field of early stage investing, small business incubation, and consulting across sectors. Sushma has worked to identify, manage, and exit large number of companies and has worked closely with several inclusive business entrepreneurs. She has been an active representative on the board of several early to growth stage companies. She started off with an entrepreneurial venture in engineering design services and moved on to role in investments. She was recognized by IAAIF as 40 under 40 alternate investment professionals in India. Welcome, Sushma, to the 100x Entrepreneur Podcast.
Thanks, Siddharth. It's great to be here today.
Sushma, we would love to know about your journey with Avishkar. How did you get started in investing?
Sure. So I've had a very interesting journey, not just at Avishkar, but the way I entered into investing as well. I have over 15 years of investing experience, and my Avishkar journey started way back in 2010, and it's almost been a decade since I've joined. And it's been one of the most phenomenal journeys and very entrepreneurial in many respects because when I started with Avishkar, it was close to a $30 million fund house, and we managed about two funds. And I was coming from a real estate private equity background where everyone used to talk of $1 billion funds, right? And if a fund was not close to $1 billion, then people would raise their eyebrows, wondering, what were you doing? So it was a good transition, and I'm very proud to be part of this whole the 10-year journey, and to say that we started from 30 million, and today in 2020 we are close to $1 billion in both debt and equity assets. And it's been an extremely entrepreneurial, inorganic kind of a growth journey for me as well. Lots of learnings, have constantly been pushed out of my comfort zone. I have not had a dull moment the last 10 years. In fact, now when I look back, I'm like, where did those 10 years go? And the 10 years forward also seems equally exciting for us.
Avishkar is a very different kind of fund. Can you elaborate more on the thesis of the fund, and some of the five to top 10, the top companies of the fund?
Sure. So, yes, you're right. Avishkar is different. We started also very different, and we are very unique in that respect. So, when we started way back in 2001, we started off with an investment thesis which identified rural enterprises as an opportunity. And this is way back then, where VC industry itself was extremely nascent, and even the few who were there were only talking of a handful of tech investments, and that too in the large cities like, say, a Mumbai or Bangalore. That was where all the capital was concentrating. And so then, to say, okay, we believe there are enterprises in rural India that have the ability to scale and have the ability to absorb capital to grow, was a little unheard of. Around the same time, we also identified a microfinance sector, a sunrise sector, back in 2006. And so, with these two hypotheses, we started our fund investment journey. And over the decade, as I said, things we have evolved. During the decade, the term impact investing got coined, and people started globally recognizing us as a pioneer in impact investing. So it was not a term we called ourselves. It was, the global world suddenly woke up and say, what you guys are doing would classify as impact investing. So we said, great, so be it. And so today we continue to be recognized as impact investors. However, our thesis keeps evolving. It started from rural enterprises to microfinance to now sustainable businesses. Mainly, we focus on sectors like agri-tech, financial inclusion, and essential services, which could include things like healthcare, education, logistics, all of those. So, yes, so to that question, yes, we are different, but that's only the difference in the evolving theses.
And what's the current fund size? As you mentioned, the last fund was $30 million, and currently you have 1 billion assets under management, if I'm not wrong.
Yes. So yeah, we manage close to six funds now. This is across six funds. We have about $450 million of assets under management in terms of equity across the six funds. And from the six funds, we've made close to 69 investments and 32 full and partial exits, largely in the sectors that I mentioned, which are agri businesses, financial inclusion, and essential services. So currently, we are investing out of the sixth fund, the India Focus Fund, which is the Aavishkaar Bharat Fund. That's about 125, $130 million fund currently.
And impact investing, how do you give returns to LPs? That's like whenever anyone thinks of impact, they're thinking of creating a good social cause. But does it give the same kind of returns which LPs expect from VCs in the range of 15 to 20% IRR?
Sure. I think that's where the difference is, right? So, as I said, we invest on a very strong and sound thesis, and people have labeled us as impact investors, and different people have different connotation to impact investing. But for us to continuously raise funds, we definitely have to give returns. And people are not forgiving when it comes to financial returns. Yes, we do focus on a lot of the SDGs, the Sustainable Development Goals. But we continue to be one of the better performing funds from India. So as I mentioned, we made about 69 investments, and we're probably one of the few funds in India who have made as many exits as we have. And we are also, in terms of returns, we stand at close to 3x MOIC on the realized investments. And we clock approximately 25% in terms of IRR as well. So, I don't think returns can be compromised just because we are called impact investors. And I'm sure that's true for any kind of thesis based investing fund.
25% is a fantastic number, like almost unheard of in terms of IRR.
Yeah, I know. So that's why I'm saying that we need to pick the right sectors, the right companies, and with very strong financial and business logic to it. And that's when one makes money. We are very clear on that, that we are in the business to make and return money to our investors while continuing to ensure that these are responsible businesses which are environmentally and socially friendly businesses.
So, can you throw more light upon the kind of businesses which you call responsible businesses? What are kinds of responsible and what are kinds of not responsible businesses?
So I'll give you a couple of examples from our own portfolio, right? Like as I mentioned, we've invested in microfinance as a sector, right? And without even taking a single name, when they started off, it was a huge need at that point in time because the largely underserved population at that point in time had no access to formal credit, right? So this kind of formalized the whole credit system for the BOP segment. And and they started formalizing the whole sector. There was right credit practices that were ensured. There was there was a social responsibility towards these women as well. And we brought in good practices in terms of how to behave with these these segments of population, and what kind of products and services to offer to them which are relevant and right, because otherwise these women would tend to borrow from the money lenders who had very usurious interest rates that they were charging them. And many of them were actually being pushed into poverty just because they were forced to take some kind of a hand loan from someone. But now, things have improved significantly. And in the last 10-15 years, the sector has really come out very strong. What started off as a few thousand, or a few lakhs in size is now over 2 lakh crores in sector size, right? So that only speaks volumes of how this is a sustainable business in making. Similarly, in agri, for example, we have invested in a few companies. One such example is the Soulfull brand. The Soulfull brand uses ragi as its or millets as its main ingredient in breakfast food and snacking, particularly for children, and it targets working women who don't have too much time, unfortunately, because of the work life pressures that are around. And so Soulful provides a very good, healthy option for working mothers to provide breakfast options for their children. Now, what you can ask, what is so impactful about this? Uh, it's important for me to highlight that millets, especially like ragi, have been ancient grains of India, right, which have been very easily forgotten in the last 20, 30 years with the onslaughts of, Western brands coming in and telling us that corn is better than any of the other grains that we have historically been eating. And so we have moved our consumption patterns to more modern crops, which not necessarily are native to our country, and not necessarily native to the kind of agrarian practices that we follow here. And so they tend to be heavy in terms of the water requirement, in terms of their harvest yields are very different. However, when you look at most of the ancient grains that were being grown, they had a very low carbon footprint. They didn't require as much water. They were far more hardy, could manage the vagaries of weather, which we know we face significantly because of climate change. And so the only problem they faced was there was no access to markets. And so this now has given access to markets. And so farmers are now more than happy to go back to growing to ancient grains, because they know that there is a demand for it, and it's far better for them in terms of the yields. And so even farm incomes have gone up significantly by focusing on these grains. So those are the kind of impact that we look for when we make our investments.
So you have recently invested in a fintech startup called Chqbook.
That's right.
Can you share your thesis behind it?
Sure. So, Checkbook is one of your quintessential fintech companies, which is transforming themselves to becoming a neobank. And what interested us specifically at Avishkar was the fact that they had a very clear focus on a segment that appealed to us, which is the small business segment, or the small mom and shop, kirana shop segment, right? And that we know is one area where uh, credit is not easily available. Most of them continue to be underserved. They don't fully come under the financial inclusion terms that they don't have access to credit from formal financial institutions like banks. And so, there's also a report by IFC, written by IntelliCap, which talks of the missing middle, and the credit gap in that missing middle is what they estimate close to about $500 billion, right? And this missing middle is largely comprised of these small businesses and kirana shop guys. And what Chqbook has done very smartly is has coined a term called watering hole, where they service customers and source customers from watering holes, where they go and access these customers and provide them all financial products and services which otherwise was not made available, which includes working capital loans, short term credit, business loans, personal consumption loans, like, maybe a motor loan, housing loan, credit cards. So I was quite surprised to see that 70% of the customer segment did not have access to credit cards, right? So that's how underpenetrated credit cards is. And insurance products, because of low awareness of insurance, these people were not even provided the right products at the right price. And in the COVID environment, we've seen that there's been a sudden offtake in terms of the insurance, especially in the health insurance products. So those are the offerings. They partner with large banks and other financial institutions, and provide the intelligence on the kind of products that this segment requires. So a very unique platform transforming to become a neobank soon.
And what are the other companies where you have led the investment in? The recent ones.
Yeah, so I largely look at the financial services portfolio within Aavishkaar. And again, as I was saying, our thesis has evolved over the years. And our portfolio is a healthy mix. We have a small finance bank in our portfolio called Utkarsh. We have a large MFI in the eastern region called Arohan Microfinance. We have a small housing finance company called Altum Credo, focusing on the EWS LIG segment. We have a very interesting payments company which started off as ATM managed service provider for banks and has now evolved into a full stack payment service company for large banks. So our portfolios is quite diverse. There is no concentration on any one particular type of business, and but all across all our companies, we focus on this segment, which is largely the underserved populations of women or rural women, small business owners, financial infrastructure, all of this. So yes, I've made about 11 odd investments from Avishkar, all in financial services.
And among the Avishkar's portfolio, 87% of the companies are in seed and early stage. What about the rest 13%? Tell us about the exceptions.
Yeah, yeah. So we have evolved our investment strategy over the years. Initially, our first few years, we were only focusing on very early stage seed investments, because at that point in time, the ecosystem was not fully developed yet in the space that we were investing in, and hence it required that kind of investment support. Over the years now, that ecosystem is vibrant, thriving. There are a lot more investors who have come in. In fact, the whole VC ecosystem has become so much larger, with all kinds of investors on the horizon. And so now slowly we are moving to growth and early growth company investments as well. So the 30% of our investments are mostly in early growth businesses as well, to support companies from Series A to Series B stage of their journey.
And if you can share, what does the typical first check from Avishkar looks like, both at early stage and at growth stage? And what kind of ownership is Avishkar looking in a company?
So the typical check sizes could be anywhere as low as about $1 million, depending on the size of the company and the stage of the company. We've also invested in companies which were just business plan stage, where we really liked the entrepreneur. We really believed in his idea, and we said, we want to back you. One such example was Equitas Small Finance Bank when they first came to us. They were just a business plan stage, but he had a very compelling story and very strong track record of his own. And so when we started off, they just about had the license to begin. And as they say, rest is history, because it was one of the first companies in our portfolio to go public, and it's now a listed company. So that we go in that early as well. So about $1 million is our check size. But now we can also support our companies longer, till about 15 odd $1 million. So 1 to 15 million is the range in which we invest in.
And what are the other companies in your portfolio which have gone public?
So right now, we Equitas is one. There are a couple of them who are waiting for markets to improve to list. So there are two, maybe three of them who would list once the market conditions improve. And yes, we've been through their journey in the last 10 years to bring them to the scale to take them public.
Avishkar has mostly backed first time founders, Sushma, and whereas other funds would prefer to also invest in successful serial entrepreneurs. Is it a coincidence, or is there any particular thought process behind it?
Yeah, so when we say we back first time founders, what we mean is we back professional entrepreneurs, people who have probably been working as a professional in large institutions, who aspire to become entrepreneurs in their own right. So those are the kind of entrepreneurs we have been backing. Yes, I mean, if we do get serial entrepreneurs who have successfully churned out multiple companies, definitely. But one area where we have kind of not gone too much into are family run businesses. We would prefer backing professional entrepreneurs.
And how has the fund, you mentioned about 32 exits in the fund. How have you planned your exit? Like, and if you can share the horizon of exits that have been.
Sure. What's very interesting in Aavishkar, our ideology is we are not in the business of investments. We are actually in the business of exits. Because only if we are able to generate exits and returns for our investors will we be able to successfully continue raising our funds and then continue investing. So we have a very strong filter for exits right at the time of evaluating deals. There's significant time spent in just addressing the exit thesis for most of the companies that we get into. We don't have a strategy which says, let's pray to God and let's just go ahead and make this investment, because that doesn't cut it for us. Because we've known how difficult exits are in India, and the kind of effort that goes into building exitable companies. So exit is a very important filter for us at the time of investment itself.
And who have been, because I believe you mentioned about a few public companies or which are about to go public. What have been the other form of exits, like majorly M&A by larger companies? And if yes, what have been those? Who have been those larger companies?
Uh, that's interesting. Yes, so there have been M&A as well, but actually most of our successful exits have come from trade sales to other private equity or other larger funds who have bought out our stakes. So most of our successful exits have been those. So not so much on M&A.
And do you think the M&A ecosystem of India is still in very early stages, not yet matured, like a few years behind those of China and Silicon Valley? That's why the reason is
Uh,
this.
yeah. So, when you look at M&A, I think most of the large corporates have their own strategy teams. And the constant dilemma they face is build versus buy. And because I guess we have so much talent available and large teams available, most large corporates feel that, they can very easily build on their own rather than buy. So we had one very successful exit on M&A when we sold a online consumer brand called Jaipur to Aditya Birla Retail. So that was one of the better M&A exits that we had. And but those again are far and few, because I know most of the discussions during that time were, you know, how difficult is it to build something like this from scratch. What they don't realize that it takes a lot of time and effort and back end work that goes into building a sizable business. And yes, while people can build things, it takes a lot of time and effort, and most likely than not, it could not even be a success. So, and here, if there is a successful enterprise that has demonstrated scale, profitability, then I don't see reasons why M&A should not be the route most large corporates should take. But yes, it is not as vibrant as you see in other countries.
And you mentioned about mostly the exits have been to larger PE funds. So if you can share who have been those PE funds, like is it the like of IFC?
Uh, not just not IFC at all. In fact, I think it's not their policy to give exits to anyone. But that aside, it's been large commercial private equity funds. We've sold our stakes to the likes of Netherlands-based funds like Triodos and TR Capital. These are some of the names that come to mind right now.
And do you think exits are glorified in the VC ecosystem? And if yes, do they need to be?
Um, Sorry, but when you say glorified, what exactly do you mean?
So glorified means, entrepreneurs who have built successful businesses, let's say for 10, 15 years, and still hold the reins of the business while building more than 1,000 crore businesses, right? And those entrepreneurs who have exited, right? So I believe the second category of entrepreneurs are more glorified and uh, put on higher pedestal in the ecosystem than those who
And
continue to.
rightfully so. And rightfully so. Why not? If an entrepreneur has demonstrated that they have the ability to grow and create value for all stakeholders, they have every right to be put on a pedestal, I feel. As you rightly pointed out, exits in India are have been challenging. We don't have a very deep ecosystem yet with different pools of capital coming in, and it's not yet mature. And so, exits are challenging. So that's why, especially in the tech VC space, we see a lot of M&A opportunities, because billion-dollar companies from other ecosystems see India as a very attractive geography, and that's where M&A works well for them. But I strongly feel we should celebrate every exit, every entrepreneur who has given exit and created value for all stakeholders.
And Sushma, on the terms of exits, what do you think is required to make India a mature M&A ecosystem, and how much time do you think it will take to be where Silicon Valley or China is today in terms of M&A?
Um, in terms of making this a more vibrant ecosystem, I feel India is still a little early in the cycle. We don't have, as I said, different pools of capital flowing in very easily, especially because, I feel even the domestic investment ecosystem is not as vibrant as one probably sees even in China, where we get to hear that the sovereign of China tends to back lots of high growth potential companies, and have taken them to a certain size, and are very supportive in their policies and in the regulatory guidelines as well. Which sometimes, maybe because of the nature of our country, things become very complicated, and so there's not as much capital flow into into this ecosystem. So we have to rely on external funds a lot, and external funds come at a price. And so, and also then, like the whole ecosystem of early seed, VC, Series B, Series C, Series C, then public markets, and maybe even secondary funds. That's the whole value chain of investors we need in this ecosystem to make this a thriving place. And even if you look at public markets, how many startups can really go to or even dream of going to public markets, right? We don't have that kind of ecosystem because it's not built in yet. And so, unless there are some significant changes, it's going to take some time for this to evolve.
Sushma, the venture capital space in India is a male dominated space if we see gender equation, especially in the partner level of VC firms in India. However, Avishkar has made a difference if we see across the team. There's a good mix of gender diversity. We also see 30% of your portfolio companies have women as founders or board members. Was all of this done with an intention to balance gender equation?
Uh, I think I don't know about intention, but it just so happened that even when we hire on merit, and it just so happened that the women we hired were extremely competent with very strong experience in this space for us to hire. So it's not like they got special brownie points just because they were women. We hired them out of merit, right? And so probably we are one of the few funds who don't apply gender bias when we are hiring. That is one. And the same thing applies when we are evaluating deals. So we evaluate deals only on the merit of the deal and not whether it is a female entrepreneur or not. And most often than not, we've seen that teams which have a healthy mix tend to do better. And and now when you read a lot of global literature, you see that it is true that well balanced, well diverse teams tend to do far better than very homogeneous teams. So yes, I don't think we do that consciously. However, what we do consciously is we try to create corporate governance, even at the board levels. We try to ensure there is gender balance on boards. We try to bring in senior women leaders who are able to add a lot of value. And then, because we also believe that when when women leaders are there, they tend to open up for other women to come at different levels of the company and to grow as well. So that's something we consciously do.
Coming towards the end of the podcast, Sushma, you are an inspiration to many. Do you want to share a piece of advice for our listeners, especially women who want to make careers in the VC industry?
Thanks so much. I mean, that's quite a lofty thing to suggest, but I do try to make my difference. I try to mentor quite a few upcoming women leaders because I see that there is a little bit of fear in many of them because financial services has not been very kind to for growth, for career growth especially, mainly because of the kind of time and the kind of commitment one requires, especially in investing. You're here for the long haul. It's not a sprint; it is a marathon. You need to stay here to actually reap the benefits of your investments. So the commitment timelines are much longer than probably any other space. And so my only suggestion to many youngsters who are coming up now is, I don't think there is a lack of talent, nor is there a lack of intelligence. I think many of them are equally or better than, much brighter than their other counterparts. And so if they're beating themselves down on that, they are being unfair to themselves. I just say that, just find the right teams and persevere, things will work out well.
Thank you so much, Sushma, for sharing your wisdom, your insights, and your experience on the podcast.
Thanks so much, Siddharth. It was lovely talking to you.